Welcome back, ladies and gentlemen. Thank you all for joining me today. Today we're going to be talking about something that I didn't really see happening, but we got some big news at Snapchat, and it actually affected pretty much the broader market all of today. What is it? May 24th. So May 24th, the news came out May 23rd, so on Monday. But let me just go through what happened today and really just show you the carnage that has happened. It's not good. But if you guys like these kinds of videos, make sure to hit the like and subscribe button down below, and make sure to let me know if you have any companies you want me to look into. Let me know down there as well. Without further ado, let's hop right into this. All right, so Snapchat actually put out a memo because the Snapchat CEO was part of a conference, and as part of that conference, they actually updated their guidance on where they saw sort of their broader market going as far as internet advertising, social media advertising. I think they call it ad tech in some spaces, but basically social media advertising because, Snapchat. So one of the craziest things though is that if you didn't even see what he put out and you just looked at the market today, Snapchat is down over 40%. 40% in a day. Not we're not talking about from November to now. 40% in a single day. That's I didn't think we would see that happen. But the thing is that actually dragged down some of the other, internet advertisers like Pinterest, Google, Amazon was down today too. Facebook obviously was down pretty big today as well. So it's really interesting to see because it kind of same thing happened when Snapchat announced their earnings. It kind of dragged down the other companies for a little bit until they announced their own earnings. You can kind of see like where that went. And a lot of times the, one earnings call will usually give insight into another company's earnings call, especially because you think of like a company like Pinterest, Snapchat, and Facebook, or in our case, Meta now, they kind of operate in the same space. And so a lot of times, if one gets affected or changed or impacted by something, a lot of times it impacts the other companies. So I'm just going to pop up on the screen right here. You're going to be able to see what the actual percentages look like on the day. So Twitter's down 5.5%, and that's along with the Elon deal still sort of pending. You have Pinterest down 23% on the day, Snapchat again down 43%, Meta Platforms 7.62%, Alphabet, so Google's down nearly 5%. And this is all on the backs of, Snapchat CEO coming out and releasing a statement during their sort of conference that he did. But before I hop into and, explain exactly what he said, one of the things I want to talk about is what's happening in this industry. So beyond just the broader market, there's been a lot of hiring freezes or layoffs or other sorts of things that are happening on a more macroeconomic level. And I think that this is something you should pay attention to because if people start really getting laid off, there's not going to be a lot of people to buy things. And if not a lot of people to buy things, marketing and budgeting, the marketing budget's really going to get cut back. So if you're going to get into internet advertisers like Facebook or Google, make sure you understand sort of what the downside risk is of these companies. And if you're going to get into one of these advertising, get into someone who has positive free cash flow. It's actually generating a bottom line because Snapchat is not. So, but as of right now, Snapchat's slowing the hiring. I think they're still going to hire around 500 people by the end of the year, but they're really freezing some of their hiring spots depending on the position. Meta has already announced that they're going to be slowing down their hiring and freezing positions as well. I would imagine that we're going to start seeing a lot of other companies kind of either follow suit, either layoffs or freezing their hiring or something around that realm. So I wouldn't be too surprised. You see something from like Pinterest or Twitter saying, or freezing hiring or just there's not as many positions open or however they do it. So that is something I would like to warn you about. But let's hop right into what actually got said for Q2 2022. And that was revenue growth year over year of 20 to 25%. So that's comparing, Q2 2022 to Q1 to Q2 2021. And the thing is that Q1 through Q4 of 2021 had really, really high advertising rates because people had to, spend their way into bringing more customers in. And I believe the Apple privacy change really came in around Q3. So a lot of the year-over-year numbers are going to be really based on Q3 and going forward to see what the actual organic growth is. Because the thing is, comparing Q1 of 2021 to Q1 of 2022 and so on, if you keep going throughout the rest of this year, it's going to be hard until you hit Q3. So that is something that I want to warn you about. But the revenue growth for Q2 2022 was guided to be 20 to 25% year over year. Their adjusted EBITDA was estimated to be between break even and 50 million. So what got said? What was the bad news? Why are we down 40% on Snapchat? Why are we down 7-8% on Meta? So he said, since we issued guidance on April 21st, 2022, the macroeconomic environment has deteriorated further and faster than anticipated. As a result, we believe it is likely that we will report revenue and adjusted EBITDA below the low end of our Q2 2022 guidance range. We remain excited about the long-term opportunity to grow our business. Our community continues to grow, and we continue to see strong engagement across Snapchat and continue to see significant opportunities to grow our average revenue per user over the long term. So they had disclosed this. They had disclosed this in a conference. They issued an 8K along with this because this is, this materially changes the expectations of Q2 2022. The thing is that for them to be lower than lower than what they had originally guided, it was only a month, give or take. What is that? April 21st, 2022. It's, May 24th today. It was only a month. I mean, things have changed, but have they drastically changed to where you couldn't guide forward? It changed that broadly. I don't really know. And maybe the thing is that it might have been a little bit more optimistic than, they were originally supposed to. But I think that overall, it's important that we point this out because if Facebook or Google or Pinterest or Twitter or any of these sorts of companies have better outlooks and they really believe and guide that they'll make their numbers, they should probably release a statement. I would imagine that they probably won't, but I feel like it'd be in their best interests for like a smaller company at the very least to release a statement saying like, no, we're not seeing that ourselves. But if no one comes out with anything, then Snapchat's, guidance is going to be what rules sort of the expectations going forward and going into the next earnings season, which is still, honestly, it's still a couple months away. So between now and a couple months away, does it still deteriorate? I don't know. So we're going to have to see and keep track of sort of what is happening in that space. But for me, the way I'm looking at this, I'm currently in Meta. That's my only position as far as, where I see opportunity. I really do like Google. I just haven't looked into it yet. And for me, though, Google is so big that I wonder if, I doubt it's going to fall a lot just because it's such a big market cap. But maybe 20-30% down if we really have a serious drawdown, that might be a good entry price just off the basis that it's Google. You know what I mean? But I haven't looked into it yet, and I really want to. So stay tuned for a video for that. The only other thing that I wanted to touch on was the fear and greed index. So the fear and greed index is something that sort of tracks like where we are in terms of euphoria. Do we think the market's going to crash? Euphoria. Do we think the market's going to crash? And really what people's sentiment is. And there's a lot of macro things sort of playing out right now in terms of the federal funds rate, expectations for inflation, and those sorts of things. But you can see here that we're way deep in the fear piece of the index. And the thing is too is that there's actually a timeline to see like how this has changed over time. And obviously you can see as the year has gone on and as we've gone from 2021 to 2022, it's gone down and down and down and down. People are becoming more and more fearful. And the thing is when you're getting into a time like this is prime time to start buying or at least start looking for deals. And the thing is that what you want to do in an ideal situation, find a company that really piques your interest, has really good fundamentals, you understand the business model, put that on your list if it's not at the intrinsic value yet. And then as, if we continue to have a sell down, you'll be able to decide, can I buy into this at my intrinsic value that I've calculated, or do I need to wait just a little bit to, hit a margin of safety? So that's what you need to do in these times. It's not, sell out of stocks and run for the hills. It's let's come up with a plan, let's be analytical, and let's think about, all right, these are where the best deals are going to be made is when markets are volatile like this. And let's say if you believe in the story for Google or believe in the story for Meta, and it sells down 50%, Well, you can keep buying shares and accumulating shares. It's not an opportunity for you to sell. And the thing is, you have to be a long-term investor when you're looking at this and thinking in the long term. So when you're looking at companies, make sure you understand the fundamentals. Do the fundamentals make sense to you, and are they good? Meaning, do they have a good balance sheet? And do you see them doing well in good or bad times going forward? Do you like the business? Do you think that there's growth? Is there catalyst? Look for those. Is it at your intrinsic value? The thing is with companies like Snapchat, they're not making any money. They've lost money over the last 5 years. Do you really see them making money in the next 5 to 10 years? Those are things you want to look at because it dropped by 40%. But if it dropped by 40%, you don't see it making money, then it's not worth investing into, because the thing is the risk to reward is not worth it. And that's what you're playing. You're playing that risk to reward. What's the probability that this is going to do well over the next 5 to 10 years? What's the probability that this comes down and has a huge drawdown? It doesn't really move. So that is something that as we get into this area that you should really pay attention to. And that's pretty much it for today. If you have any questions, let me know down in the comments below. I'm going to keep reviewing companies. I'm going to keep showing you guys different companies and doing some different analysis on companies I'm looking into. I do want to do sort of a full portfolio video, but I'm just trying to get a good looking way of presenting my portfolio, because I don't have, my brokerage doesn't have a good way of showing it. So, but let me know down in the comments below if there's anything you want me to look into. I hope y'all have a great day and happy investing. Bye-bye.